Hello and welcome to Markets Today. I'm Sonia Shenoy and with me is Reema Tendulkar. It's been quite a volatile day for the markets. So initially the market had a good session, climbing to above that 8400 mark. But then towards late trade, it was quite volatile and the market succumbed to selling pressure, ending absolutely flat at 8360 or so. We've been used to this volatility, Reema. So now the traders have become a little more thick-skinned compared to what we've seen in the past.
Yes, indeed. And, today's move doesn't even give you conviction whether we put a bottom in place. The way we came off a bit from the highs, we managed to hit that 8,400 mark for the first time since the 24th of April. Unfortunately, we couldn't quite hold on to the gains. But we'll discuss all that and more. We'll get your opinion as well on the market. These are the top stories. Markets succumb to a bout of volatility in late trade as the Nifty gives up most of its gains to end flat. The Bank Nifty slips into the red with losses in stocks like an Axis Bank, Bank of Baroda and State Bank of India.
And the worst seems to be over, says Ramdev Agarwal of Motilal Oswal Financial Services. He says he does not expect too much downside from current levels, but adds that we may see some funds moving to China from India if China continues to perform.
Mid-caps end flat today, but stocks like in Apollo Tyres, Motherson Sumi, JP Power succumb to selling pressure.
Alright, those are all the top headlines and here are the experts that we have lined up for you guys on the show tonight. Ramdev Agarwal of Motilal Oswal Financial Services will tell us why India continues to remain the top pick for most global investors. Sushil Kedia from the Association of Technical Market Analysts will talk about the technicals and we'll also tell you how experts are scoring the Modi government after 1 year of governance.
And volatility is back on the Dalal Strait. A late slide caught the bulls off guard as major indices ended the day with marginal losses. Bank stocks were the major culprits. Sensex by the end of it lost about 40 points, but this index is still holding above the 27,500 mark. The Nifty was down close to about 8 points and it still remains within striking distance of that 8,400 level. Mid-caps too suffered only marginal losses with the index ending almost flat. Anuj is here with more details. Anuj, how are you reading today's move?
Well, volatility was back on the Dalal Strait till about 2 o'clock. It looked like everything was going good and the market was going towards that 8450 crucial resistance mark. But from 8427, the Nifty slipped 80 points in a matter of 15 minutes, and after that it was quite volatile. So the market managed to recover the losses as well and ended flat. The Bank Nifty dragged and IT stocks did well in trade today. Let's talk about the stocks that moved in today's trade. First, on the losers, and some heavyweight stocks were down quite a bit. HDFC was down 2%, so was Tata Motors, and Lever was down about close to 1%. Oil and gas stocks corrected a bit in today's trade. Stocks like ONGC and Kane from the upstream and BPCL from the downstream were all down. Other losers in today's trade included stocks like Axis Bank, Power Grid, and Mahindra. On the gaining side, IT clearly was right on top there. So stocks like Infosys, Tech Mahindra, Wipro, all of these stocks were gaining ground. In fact, all of them up between 1 to 1.5%. Some other prominent Nifty winners included Ultratech Cement. In fact, it's been good time for Ultratech Cement, outperforming some of its peers. Hero MotoCorp after a long time on the winners chart, and Vedanta was up about 1.5%. And finally, in the mid-cap space, the stocks to watch out for, Hindustan Oil, that was up 12%. Sterlite Tech was up about 9%. And HSIL today closed below its 200-day moving average. That stock was down about 6%. So no major harm done. It's just that if you thought volatility was gone or has ebbed, maybe you'll think twice now, because clearly it's not going anywhere. And in fact, as we move closer to the expiry, the volatility in fact may increase.
All right, volatility could increase. Thanks, Anuj, for that. Time now to get in our market voice for the day. Ramdev Agarwal, Joint MD of Motilal Oswal Financial Services, does not expect too much downside in the market from the current levels. And he also adds that the recent spate of correction hasn't dented India's appeal to global investors at all. Take a look.
If you talk about the investing community, those who are looking for 3, 5, 10 years, I think they are committing continuously. And they are quite excited about hearing about what's happening in India, how much time will it take. Now they are asking what's our view in terms of when can it happen, how it can happen. So I mean, now they are coming down from the promises to really performance thing. So as the performance comes, see what it clearly means is that first thing is there are not many investment alternatives. Second, that India is a very if India performs, and whether India performs or not, the companies which performs in India, I think they'll get enough bias. So, I mean, whether it is 6 months away, I mean, generalized economic growth, how far it is, nobody knows, and nobody can predict. And when it happens, it happens. If you see the earnings this time, all the great franchises, they are delivering fantastic results. In fact, much better than even the analysts expected. Started with Maruti, then came HLL, then came Nestle. Then, so all these big companies who can hold on to their savings out of the raw material or interest cost or whatever, or pass on, even despite muted volume growth, they have been able to deliver fantastic margin. Look at Eicher result in the Maruti and Eicher in automotive, where raw material prices came down, they expanded the margins and they delivered wonderful result. Of course, Eicher had the volume growth also. Yeah. Whereas a lot of other automotive companies in the same space, despite the reduction in the raw material cost, because that's common for everybody, they couldn't hold on to everything what they gained. They had to pass on by way of discount or low price rise or whatever. So clearly these are the weakest times. The tough ones will, really sail through. When you are investing in the stock market, you should always be ready for 10% decline from any level. If it goes to 8,000, you should be ready for 7,200. If you are at 7,200, you should be ready for 6,500. So 10% down. See, because upside we can take as much as it can come. 10 times, 20 times, 30 times, all less. But how much is the downside stomach you have? That's the investing. See, the moment you have reconciled yourself to 10% downside, upside will take care of itself. And give long enough time, 5 years, 7 years.
All right, shifting focus then to the technology sector, big boy Wipro has hived off its digital business into a separate unit and is looking to touch $1 billion in revenue from the digital business alone in the next 3 years. However, margins will continue to remain lower and that remains a concern for the company. Purnima Murli spoke exclusively to Wipro's new digital head, Ranjan Kohli. He said that Wipro will look at acquisitions in the digital space, especially from North America and Europe.
While strategy is same, the execution of this is now going to be very different. We've been set up as a unit outside of the traditional Wipro service lines and business unit setup. What does it mean? It means that we will get a lot of investment, we will get a lot of focus. Also, we have the liberty to set practices which help us win in this space, which is agile, multifaceted, experiment fast, learn fast, which would be very difficult to do with the structures that we have in place in the traditional Wipro business. There's so much business that is moving towards the digital space, and the definition of digital is also ever expanding. So I don't doubt the fact that it will be a top 3 service line within Wipro in 3 years' time. And also the growth may not be linear. It will follow slightly different trajectory, but absolutely we are on track to meet that goal. So I hate to put a number there, but it will be a significant investment. Also, the $100 million corporate venture capital fund that we have created, I believe that majority of that investment will also go towards startups that are more digitally focused.
All right, so that's the next big growth avenue for most technology companies, going the digital way. But even as rumors of Indigo flying into the Lal Street continues to swirl around, another airline could be knocking at the doors of the primary market. Sources say that GoAir is evaluating options to file the initial public offering or the IPO worth almost $200 million. Kritika Saxena, who broke that exclusive story, joins us now to give us more. Kritika, how firm are GoAir's listing plans? Are the developments gathering pace?
Well, let's talk about the valuation. As you said, $200 million is what they're looking at raising. The Wadia Group looks at partially exiting maybe about 10 to 15% through the IPO. So the fundraising that they're looking at, including the fresh issue or the liquidity that they want to bring into the company, is roughly around $200 million. But that pegs the entire company at anywhere between $650 to $700 million. Now, you asked me about the stage that they are at currently. What I understand from my sources is that 2 bankers, foreign bankers, according to my sources, have been appointed to chart out the contours and the timeline and do the due diligence for a prospective IPO. If the contours are according to the promoters' liking, they may consider an IPO by the fourth quarter of calendar year 2015. Sonia, but there's a big question mark over here in terms of the timeline, given the fact that Go Air has been struggling compared to its peers. Operationally, they have fallen behind the likes of Indigo and Jet Airways. So at this point in time, it is not a very lucrative option according to analysts, but by the fourth quarter of CY15 or the first quarter of calendar year 2016, it could make sense for them to go ahead. So they'll kick-start the proceedings rather, or the road show possibly by the fourth quarter of 2015 or the first quarter of calendar year 2016.
Thanks, Kritika, for running us through that. Sterlite Technology was a stock which is buzzing in trade today. It gained nearly 10%. Remember, yesterday the board approved us demerging their power and telecom business. Varinder Bansal joins in with more details and what he's picking up on how the street is reading this restructuring.
Well, thank you so much. Clearly, the stock has seen that up move from 60 rupees towards 72, 73. The important news coming in that the company, of course, has demerged the power business, which will now be an unlisted entity, and the telecom business will remain a listed entity, in the business. Clearly, this was expected. Most of the analysts in the street were hoping that this announcement will be coming in. This is very good news for the company, because power business, if you just see the results, they have been dragging the business of the company in terms of financial performance. The bread and butter and the biggest business is, of course, the telecom business, which will remain as a listed entity. The shareholders or investors will have the complete freedom to choose what they want to choose in terms of investing. So the stock has seen an upside based on this demerger news coming in. The only one thing which fund managers or most of the some of the investors are not liking it, that led the market, the market could have decided the value of the power business, since it will be an unlisted entity. The management of Sterlite Technologies have put a value of nearly 880 crores to the power business. Some of them have the confusion of whether it is the right pricing or not. So it was better in case it was decided by the market. But clearly, going by the evidence of the way stock is moving, the market has liked this demerger news coming in, which was expected, and the stock has been moving up.
Oh yes, the stock gained 10% in trade today. Thanks, Varinder, for that. But moving away from the equity markets for a bit, in a bid to curb India's massive appetite for gold, the government has come out with a scheme to monetize the yellow metal. The Finance Ministry has released a draft discussion and has invited public comments on this as well. Sapna Das has a report.
So this is at a draft stage as of now, and public comments have been invited June 2nd. Once the comments have been received, it's likely the government may also seek a cabinet nod and then go ahead to decide the timing of the notification of the scheme. The key features basically are the fact that the interest rate, or rather the rate of return on such gold deposits, that may be decided by the banks. The government is proposing to leave that decision to the banks. Second, in case the deposits do happen, well, the tenure, there will be minimum tenure, 1 year lock-in is what they are proposing. Apart from this, the basic deposit amount, or rather the quantum of gold that you have to put in, would be a minimum 30 grams. They're trying to open it up to small depositors also. Also, you can have deposits in gold, as in bullion as well as jewelry. Apart from this, the redemption can be done either in gold or in cash. So this is something the customer will have to decide at the time of entering the scheme. Apart from this, of course, there will be those hallmarking centers. There will be collection centers, and these centers are going to basically vet your gold, and you'll be given those certificates. So those are the final details which will be worked out at a later stage of time. Apart from this, the kind of gold deposits that may come in may actually be used by banks as CRR, SLR. This is just a proposal as of now. This aspect is still under examination. But these kind of gold deposits can be used by banks as cash reserve ratio or SLR. Apart from this, banks may also be free to use this to generate forex. So these are key takeaways of the scheme. As I just said some time back, once the comments are in, and in case customers are interested to go and put that in their gold accounts, which they have to open with banks across the board, well, after that the government will take it to the cabinet, take a nod, and notify the scheme. Most likely the scheme will be notified before Diwali in the current calendar year.
It's been exactly a year since the Modi government stormed into power on the back of a historic mandate, making promises of better times for the people and the industry as a whole. But has the Modi government managed to deliver, or was there more rhetoric and less action? Mahesh Vyas, MD and CEO of CMI, or the Centre for Monitoring the Indian Economy, gives the government top points for reviving the infrastructure sector. Listen in.
I think the first thing we should do is reduce our expectations. The second is that there is progress. And the most important thing that I see in infrastructure in general is there is this excellent continuity caused by a wonderful constitutional framework. Mind you, all the things I listed just earlier on coal blocks and so on and so forth is continuity. None of these are actually Modi effect. Continuity is towards better growth and better progress. If we raise expectations too high, we will be dismayed by that. So I think the limitations that we have on the speed of growth are reducing, as we see by many efforts being made by the government.
Okay, on that note, it's time for a very short break. But coming up on the other side, we'll get you some technical perspective from Sushil Kedia, and we'll also tell you about the other stocks that were in the news. Stay with us.